Hey everyone, welcome back to Corporate Decoder, the place where we unpack those dense corporate filings so you don't have to. Today, TPG is dropping some news and frankly it smells like money, but let's see if it's the good kind or the borrowed forever kind. Before we dive in, if you want more of these juicy corporate breakdowns, make sure you're subscribed. And hey, we've got a great community over on Discord, linked in the description below, where we chat all things business. Alright, TPG is putting out their latest report, and the earliest event they're talking about happened on August 6th, 2025. This is a standard report basically telling us what happened financially in the latest quarter. The company we're looking at is TPG Inc. They're a big player in investment, managing money for others and aiming to make it grow. Now, let's talk about how TPG shares are traded. Their Class A common stock is listed on the Nasdaq Stock Market LLC, and you'll know it by its ticker symbol TPG. They also have these things called subordinated notes. Think of these as loans TPG took out, but they're a bit less important than other loans if the company gets into trouble. These specific ones are due way out in 2064, and TPG is paying a hefty 6.95% interest on them. That's TPG XL on the Nasdaq if you're curious. It tells us they're borrowing a lot of money and paying a good chunk of interest. The main meat of this report is all about their financial results. On August 6th, TPG released a press release and a presentation sharing how they did for the second quarter, which ended on June 30th, 2025. These documents are where the real numbers are. They issued this summary press release on August 6th. Think of this as the headline news, the Cliff Notes version of their financial performance. It's designed to give you the main points quickly. Then there's this earnings presentation, also dated August 6th. This is where they usually unpack the numbers with charts and graphs, trying to paint a picture of their performance and what it means. Now, it's important to remember how these filings work. The report says the information in item 202 and the attached exhibits aren't technically filed in the same way other parts of the report are. This basically means they aren't held to the same strict rules about being completely accurate under penalty of law. It's more like they're supplying information that's already been released, like in that press release. So while the filing itself might seem a bit dry, the real story is in those exhibits, the press release and the earnings presentation from August 6th. That's where we'll find the juicy financial details TPG wants us to see. And who's signing off on this? Jack Weingart, acting as the Chief Financial Officer. He's the one saying, yep, this is what the company is reporting. Now let's cut to the chase. What do these results from TPG actually tell us? Well, this report doesn't contain detailed tables directly within the main body. Instead, it points us to their press release and earnings presentation. Since we don't have those specific exhibits here, we have to infer what kind of financial story TPG is trying to tell. Usually this kind of report, an 8K with an item 282, is about announcing earnings. So we'd expect to see them talk about revenue, profits, assets, liabilities, and how these have changed from the previous period. They might be celebrating strong growth, explaining a dip in performance, or outlining future plans based on their financial standing. For a company like TPG, which manages large investment funds, their financial performance is heavily tied to market conditions and how well their investments are doing. If the stock market is up, their assets under management likely grow, leading to higher fees and potentially higher profits. If the market is down, they might see the opposite. They also make money on performance fees, which are bonuses they get when their investments do exceptionally well. So a good earnings report would highlight growth in assets under management and strong performance fee income. A key thing to watch for with investment firms is their fee-earning assets under management, or AUM. If this number is growing, it means they're bringing in more money to invest, which generally translates to more revenue for TPG through management fees. Also, investors will be keenly watching for any mention of new funds being launched or significant investment wins. These are indicators of future growth potential. Considering TPG is known for its private equity and credit businesses, we'd be looking for specific mentions of how those sectors are performing. Are their private equity funds generating strong returns? Are their credit investments performing well, or are their credit equity funds generating strong returns? Are their credit investments performing well, or are there concerns about defaults? The nature of their business means they're heavily influenced by economic cycles and interest rate environments. For instance, rising interest rates can make borrowing more expensive for the companies TPG invests in, potentially impacting their valuations and returns. The fact that TPG has publicly traded debt like those subordinated notes we saw also means they need to maintain a certain level of financial health and profitability to service that debt. If earnings were to significantly decline, it could raise concerns among bondholders and potentially impact their ability to borrow more in the future. What we're not seeing in this filing, but would be crucial from the exhibits, are any specific figures for assets under management, revenue breakdown by segment, like private equity, credit, real estate, etc., and net income or earnings per share. We'd also want to understand the changes in operating expenses and any significant one-off items that might have affected their profitability for the quarter. A good earnings call and presentation would typically break down these components and provide management's commentary on the drivers behind the numbers. For TPG, a strong quarter would mean not just growth in assets, but also demonstrating that they can effectively deploy that capital to generate attractive returns for their investors, which in turn fuels more capital inflows and potentially higher management and performance fees for TPG itself. On the flip side, any sign of slowing growth in IAM underperformance in key investment strategies or significant increases in operating costs could be red flags. It's also important to consider the broader economic climate. If there's a recession looming or high inflation, it could pressure the performance of TPG's investments and their ability to raise new capital. Ultimately, this report, by referencing the press release and presentation, is TPG's way of communicating its financial health and strategic direction to the public markets. The devil is always in the details within those supporting documents, as they contain the actual numbers that tell the story of their business performance. Without those specific figures, we can only speak to the general nature and purpose of this type of filing. Now, looking at TPG as a whole, based on this type of disclosure, they operate in a competitive and capital-intensive industry. Their success hinges on their ability to consistently generate strong investment returns and maintain investor confidence. The existence of subordinated debt, while common, does add a layer of financial obligation that needs to be managed carefully alongside their operational performance. The key strengths likely lie in their established brand, experienced management team, and diverse investment strategies. However, risks would include market volatility, regulatory changes, and intense competition for both capital and attractive investment opportunities. I'll start with risks for sketchies. However, risks would include market volatility, regulatory changes, and intense competition for both capital and attractive investment opportunities. In conclusion, while this specific document acts as a pointer to TPG's financial update, the real assessment would come from diving into their quarterly earnings release and presentation to see the hard numbers. It's about spotting trends in their assets, profitability, and overall investment performance. Alright, that's our quick decode of this TPG filing. What's your take on what TPG might be reporting in their earnings? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into the world of corporate finance. And don't forget to join our community over on Discord. The link is in the description. Thanks for watching. See you next time.